Good day, grade 10s. Welcome back to your exciting business studies lesson. Today we will be looking at the forms of ownership, specifically state-owned companies, non-profit company, as well as cooperatives. But we will be looking at the practice questions and applications questions. Without wasting your time, let us just get straight into the practice questions. The first question says, elaborate on the meaning of non-profit company. A non-profit company is a legal entity organized and operated for a collective public or social benefit. So when we talk of a non-profit company, we are referring to a registered company that is not incorporated for making a profit, but it's incorporated for benefiting the society. They include churches, charity organizations, and cultural organizations. So when we talk of these non-profit companies, you would know your church, it does not operate for profit gain, but it operates to assist, to render a service to the people of the community. Charity organizations, they are not operating for profit gains, but they are operating for rendering a service to the community, as well as cultural organizations. The primary objective of an NPC is to benefit the public, not to make a profit. Like the name is saying, non-profit company. So the main objective of the NPC is to render a service to the public rather than making a profit. Question number 2 says, explain the characteristics of state-owned company. The state-owned company is financed by the government, as the name says, state-owned, meaning the government is the majority shareholder in this company. So he is the one who finances this particular company that we call a state-owned company. The name ends with the letters SOC. So the name of the state-owned company should end with the letters SOC. If you see any company name that ends with SOC, then automatically you must know that it is a state-owned company. The SOC is listed as a public company, meaning it can offer shares to the general public. So the public can buy shares in a state-owned company, but there will never be a member of the public who can become the majority shareholder, because the majority shareholder is the government. These enterprises are managed by the government and not by individuals, since the government is the majority shareholder in state-owned companies. So he is the one who manages these enterprises and not individuals, because they do not belong to individuals, but they belong to the government himself. Let's move on to the third question. Discuss the disadvantages of a non-profit company. Non-profit companies does not generate enough capital to cover their expenses. Since it's a non-profit company, a company incorporated not for generating profit, so it does not generate enough capital to do what? To cover its expenses. The money that it gets, it usually does not cover all the expenses that the company incurs. Donations may not always be enough to finance the company's expenses. So the non-profit companies, they rely on donations. Now, the donations, they cannot all the time cover the expenses of the company. Why? Because they only rely on donations and grants from the government. So with this money, it does not guarantee that all the time, maybe each and every month, they will get a certain amount of donation. Sometimes they would get that, sometimes they would get even less, which is going to be difficult for them to do what? To cover the expenses. Obtaining grants can be slow and tiring process. It does not just automatically happen that the non-profit company just get grants. They need to apply. So the process of applying can be a tiring process. It can be slow, because you would find that the people that they have applied to, they are not responding as quickly as the non-profit companies would want them to respond. So that process alone, it's tiring and it is slow. Now, moving along to question number 4, it says advise entrepreneurs on the advantages of a state-owned company rather. Prices are kept reasonable or create sound competition with private sector to make services affordable to more citizens. So obviously with the enterprises that are belonging to the government actually, what are they doing? With those enterprises, they are trying to keep a healthy competition between the state-owned company as well as the private sector, so that the private sector cannot charge higher prices that cannot be afforded by the citizens. So here's a state-owned company trying to make sure that they are also competing with private sector to make the prices to be reasonable for citizens. So that's the advantage, that it assists to have state-owned companies because private sectors do not charge higher prices for their products. Profits may be used to finance other state departments. So the profits that are being generated by state-owned companies, they take those profits to finance other state departments so that they can continue to be sustainable. They can continue to be operating and assist in providing the services that they are providing to the public. Shareholders have limited liability, meaning the debts of the state-owned company belong to the company alone. It does not affect the shareholders. Shareholders' personal assets cannot be seized to pay for the debts of the state-owned company. Let us go for a quick ad break and we will be back.